Vince and I have been working together for I think over a year now, probably 18 months or so, and great guy. Absolutely love Vince. I consider him a good friend, and I really like his ways of looking at the market, and he's going to be talking about our favorite trade setup today. What's more important is it seems like his students and the people that go through his courses really like what he has to say as well. One of our best partners does some really good webinars, some really good live in-person events. We probably did 3 in-person events with him last year. You guys are in for a real treat. So with that being said, let's get you on here, Vince. Calling Vince Vora.
Hi, Jeff. I'm here. Can you hear me?
I can. You're.
Yeah, great.
Yeah, I'm going to go ahead and turn the control over to you. I just got done introducing you. Did I do a pretty good job?
You did. Thanks.
All right. Very cool.
Thank you.
I can see your screen.
Excellent.
Is there anything that you would like to kind of tell us about yourself before you get underway?
I think you did a pretty good job already. I'll elaborate on it a little with my presentation, but I'm certainly glad to be part of this event again. You know, yourself and MetaStock always put on great events, and we love working with all of you there. So just wanted to thank you for having me back on this one. Very excited about it.
Anytime. I'm going to get out of the way. I'm going to let you talk.
All right, great. Thanks. Thanks for being with us, everyone. It's great to have you spend a Saturday with us. We've seen some great presentations, and this one here is my favorite trade setup, so I really hope you enjoy this. Now, a bit about us here at Trading Winds and myself. I am Vince Vora, head trader at Trading Winds, and I have been trading for the past 30 years. It's been an amazing ride, and it continues to be exciting. These markets do not disappoint, that's for sure. Now, we are real traders, and we are passionate about teaching, and I love doing events like this. I'm going to do my best to make sure you walk away with a strategy you can use right away. Now, we have been developing our own strategies and trading systems over the years and teaching people from complete beginners to experts around the globe. For those of you who have not had a chance to meet me or know who I am, this is me here. And actually, the picture on the left here, I'm sitting in a cafe at a hotel here in Snowbird, Utah. I was invited by MetaStock at an event this past year, and it was absolutely beautiful there. I am actually planning to go back with my family. If you haven't been to Snowbird, you really should. It's absolutely beautiful. On the right here, I'm standing at our last live event, as Jeff was saying, in Las Vegas with our coaching coordinator, Raul. So we have a lot of fun doing these events, and in today's presentation, I'm going to share with you the same money management rules that I do at pretty much every presentation and that we continue to use. And I'm going to preach about these for a while because they are extremely, extremely important. I really don't care which strategy or system you're using to trade with. I really want you to focus on this part of the presentation because this is something that, especially in this type of market environment, is going to save you from blowing up your account. If you follow these rules, you will never take a large loss, okay? Then I'm going to walk you through step by step our favorite trade setup and bring up my live charts and actually go through many different examples with you. And then, of course, if there's time, I will try to answer as many questions as I can. Quick poll question for you, just out of curiosity. How many of you have seen me present at an event or a webinar such as this before? Just please type in a Y or an N. I really appreciate that. Thank you, everybody. Again, thanks for spending your Saturday with us. Wow, great mix. Okay. I do see some familiar names as well. Thanks again for being with us. So please do remember that trading can be very risky, and you should not trade with real money until you're completely comfortable with the system you are using. Now, let me start with our money management rules and show you how we limit our risk and our exposure in the markets. Now, the first rule it's kind of obvious. Don't trade with money you can't afford to lose. I'm sure you've heard this a million times, probably more. And although it is worth repeating, what it really is about is trading with an amount small enough that it feels completely insignificant to you. You know, when you're in a trade, and by the way, the most important part of trading is how you manage a trade once you're in it. Okay, it's not about selecting that entry. So once you're in that trade, you really do need to remain calm and think clearly to be able to manage that trade appropriately. So if you're worried about the amount of money you have in a trade, you won't be able to do that. So regardless of account size, how long you've been trading, always remember to trade with an amount small enough that it feels completely insignificant to you. Now, never risk more than 5% of your account balance in any one trade. If you follow this, you will never blow out your trading account. I can't tell you how many young traders I've seen blow out their account time and time again. Please never risk more than 5% on any one trade. And if you have a larger account, consider reducing that to 2.5%, even 2%. That way you will still have a sizable trade on, but you will be reducing your risk considerably. Now, one rule I get challenged on quite a bit, but we follow religiously, is never have more than half of your account, 50%, active in the market at any one time. And the reason for this is twofold. Number one, there's so many factors when it comes to the markets that are completely out of our control, and any major news announcement or event can really drive the markets against you. So number one, it's meant to reduce such a loss should it happen, but if it does, we then still have half of our account that we can put back into the markets and recoup those losses. Okay, very, very important. And nowadays, more than ever, you should really spread your trades out. Only select the highest probability setups, 1 or 2 per time frame max. We've seen many days where the Dow has been up 200-300 points, S&P up 25-30, for example. If you jump in on those days and you put on 4, 5, 6 trades all in the same direction, and the very next day, which we've seen very often, the market completely retraces on you, you're going to find yourself in a huge hole, and that's exactly what you want to avoid. Okay, so be very picky, be very selective. I'll show you how to do this with this strategy, but only focus on the 1 or 2 highest trade probability setups per time frame. Now, a couple other rules or sayings that we follow. Number one, you'll never go broke taking profits. Obviously, this is only if you limit your risk, and we do so considerably, and I'll show you how in just a moment. But one thing I want you to walk away from this presentation with is this statement here. This is never, trading is never about whether you yourself are right or wrong. That's important, okay? But it really is all about how much money you make when you're right versus how much money you lose when you're wrong. And what we're going to try to do today is cap your losses, control those losses, and let those winners run. Okay, so a few benefits of this system before we get into the details of it. Number one, it will work on any market, stock, options, futures, Forex, globally, any exchange, any time frame, any price level. I can tell you that personally, I have traded this not only here in the US, but in Canada, in Australia, in the UK, in Hong Kong, you name it. Recently, been playing around with the Nifty in India. It works fantastic across the board. We've traded it on $2, $3 stocks. We've traded it on the Google, the Amazons of the world. It really doesn't matter. It's based solely on technical analysis, and you'll understand why in just a moment. You don't need a lot of experience to trade this. By the time we're done today, you're going to be able to walk away and use this strategy. It has very clear entry and exit points, and it has extremely low risk. Like I mentioned, I'll show you how on the charts, but most importantly, it has been consistently profitable. I have been using this for almost 2 decades and traded it through all different types of market environments, and it works very, very consistently. So the strategy itself has only 2 components, 2 things you'll need. Number one, the 20-period simple moving average. We have tested this with exponential, with weighted, different time periods, you name it. We've always come back to the 20-period simple moving average for the fact that it works best. And secondly, the only other thing you're going to be looking for on your chart is an engulfing candlestick pattern. Now, for those of you who are familiar with it, we use it slightly differently than usual. For those of you who are not, no worries. I'm not only going to explain what it is, but how we use it with this strategy. Okay, so let me bring up my charts here, and let's start walking through this. Now, whenever you're going to bring up a chart, there are only two things that we want you to spot, and that is trend and momentum. Okay, now trend is fairly easy to spot on a chart, and you should really only focus on stocks or markets that are trending strongly. The time you get beat up the most, for those of you who've been trading a while, I'm sure you would agree, when the market is moving sideways. Okay, aside from a select few option strategies that allow you to take advantage of those periods, these sideways choppy markets are the times when you get beat up as a trader. So what you really want to do is focus on these nice, strong, trending periods. Okay, and there's always a market out there trending, be it up, be it down, really doesn't matter. You can switch from one to the other, but only focus on these areas. Now, when it comes to momentum, there's a very easy way to read momentum, and there's a couple of different ways you can do it. One is to just focus on the price action, okay, or the bars, the candlesticks here, and judge it by that slope. So when they're trading higher, moving higher, you've obviously got momentum to the long side. Okay, now this is where the 20-period simple moving average comes in, and here's why we use it. During every trend, there will always be times where you get a pullback, some type of retracement or consolidation. Now, if you try to read the price bars during these times, you can easily mistake in these periods for downward momentum. Well, the reason why we use that 20-period moving average is not only to judge the strength or the amount of momentum on our side during that trend, because it pretty much draws it in for you, okay, rather than reading those price bars. But during times when you get that pullback or consolidation, if you do not see the moving average starting to flatten out and roll over, if it maintains its slope higher, then you know that this retracement or consolidation is temporary. And then it only becomes a matter of spotting the turning point when that retracement is over and where that current trend will continue moving in that direction. Okay, so what we want to focus on here is trading with trend and momentum. When you're trading with trend and momentum, half the battle is already won. Okay, so let's talk about spotting this setup. Everyone understand so far? Is everyone clear? Any questions before I move on? It's very important that you understand how to read momentum, and then we'll go. Great, thanks, Dean. Roger, thank you very much. Okay, so here's the actual setup that we are going to focus on. Okay, if you're not quite clear on something along the way, type in your question. If I can spot it, I will answer it. But let's move on to the next section, and I'm going to draw this out for you. Okay, so we mentioned that for long trades, we're going to be looking for trend and momentum to the long side. So obviously we're looking for some type of slope higher. Now, obviously you can have a slight slope, slightly more significant, but we are always going to be looking for a slope and as high as possible. Okay, the more significant the slope, the better. And then we're going to patiently wait for some type of retracement or pullback. Okay, it can be sideways, it could be slightly back, it could be sharply downward. Really doesn't matter. But while we're in that retracement phase, it's at that point that we are going to be looking for a bullish engulfing pattern, and it's going to look something like this. Okay. So in other words, there's going to be a difference between the setup and the trigger point in this, but what an engulfing or a bullish engulfing candlestick pattern looks like is this. You want the body of the candle on the right to completely engulf the body of the candle on the left. Now for the setup, we're only looking at the bodies of the candles, not these wicks or tails here, okay? Just the bodies, the difference between the open and the close, okay? And as long as the body of the candle on the right engulfs the body of the candle on the left like this, you have a valid setup to the long side, okay? Now, the candle on the left here, the body can actually be at the same levels as the candle on the right. It just cannot exceed it, okay? But more often than not, you see something like this, okay? The only difference is that the candle on the right here, the engulfing candle, this for a long setup should be a green candle. In other words, you want it to close as close to the highs of this period as possible, okay? The closer it closes to its highs, the stronger the follow-through tends to be. Okay, so this is what a valid setup would look like. Okay, now what do we look for as the trigger? Okay, for the trigger, what we're looking for is a trade. Okay, one tick or one penny above the absolute high of this bar, including the wicks. I don't have the wicks drawn in here, but you want a trade above the absolute high of that candle. If you get it, you go long, and your stop goes just below the low of the exact same candle, the absolute low, including the wicks, okay? So your risk will always be contained to the range of that one bar. And so what this setup signifies is that this retracement phase or consolidation phase is over, and that this trend higher is going to continue, okay? And I'll show you live examples in a moment. Let me just draw out the same setup and trigger conditions for a short trade, and then we will come back to this. So for a short trade, it's exactly the opposite. You're looking for a slope lower. Again, the more significant that slope, the better. You're looking for some type of pullback or consolidation here. And then it's at this point where you're going to be looking for a bearish engulfing setup. Now, the key here is that the bearish and the bullish engulfing setups look identical. Okay, the only difference is that for a bearish setup, the engulfing bar here should be red. Okay, because you want it to close as close to its lows of that period as possible. In both scenarios, the previous candle can be any color. It really doesn't matter. Okay. Remember, for the setup, you're only looking at the bodies, and what you're looking for is that the body of the candle on the right completely engulfs the body of the candle on the left. For the trigger in the trade, you're now looking for a trade one tick or one penny below the low, the absolute low of that engulfing bar. Once you get it, you go short, and of course you can short the stock, you can buy a put, you can put it on a spread, whatever you prefer, and put your stop just above the high of that same bar. Again, limiting her to the range of the one bar. This is your reversal signal telling you that retracement phase is over and that that trend lower is going to continue. Okay? Everyone clear on that? All right. Now, I see a question from Agnes saying whether the candle has to be below or above the 20-period moving average at the time. The answer is it really doesn't matter. Let's go through a few examples, and I'll show you here why it doesn't matter. Okay, so let's focus first of all on this uptrend here. Okay, now this is the British pound Canadian dollar Forex pair. Again, it doesn't matter whether it's an equity, a futures contract, a Forex pair, whatever time frame. This happens to be the daily time frame, but the setup, the rules apply exactly the same way to all markets, all time frames. So what are we looking for when we bring up a chart? We're looking for trend, and we're looking for momentum. How do we spot that momentum? By the slope in either the candles or what we prefer to use, that 20-period moving average. So if we look at this 20, it's clearly sloping higher. What are we patiently waiting for is some type of retracement or pullback, and we see one right in here, okay, during this time, this pullback. While we're in the midst of that pullback, we're keeping our eye out for a bullish engulfing setup, which we get right here. Okay, can everyone see that? Great. Just look at the body of the candle on the right, which engulfs the body of the candle on the left. And remember, they can be at the exact same level at one end or another, but the body of the one on the left cannot exceed the body of the candle on the right. Once we've identified that, what makes this a valid setup? Okay, what makes it a valid setup? Well, the setup is going back to Agnes's question. Is the 20-period moving average still sloping higher at the time of this reversal signal? Yes, it is. In this case, it is. That makes it a valid setup. So it really doesn't matter whether this setup, this engulfing pattern, happens in front of the moving average, whether it overlaps the moving average, or whether it happens below the moving average. The only thing that matters is that at that time that you see it, the 20-period moving average must still be sloping higher. If this pullback were to go too far, if it were to go well below this 20, the 20 would start flattening out and rolling over. That means you've lost momentum and you no longer want to take that trade. So this is a valid setup. What are we looking for as far as the trigger in? We're looking for a trade 1 tick or 1 penny above the absolute high of that bar. And if we get it like we did the very next candle, we go long and the stop goes just below here. Now, there are two very important rules that I need you to understand here. Number one, once you see that setup, okay, and you're waiting for that trade above the high, if we get a trade below the low of that bar first, before we ever get a trade above the high, we disqualify that trade. Okay, we no longer want to take that trade. Rule number two is if 2 more bars complete and we still have not traded above the high, we also disqualify that trade. Those 2 rules will save you from most trades that would otherwise be stopped out. Okay, so in other words, most trades that don't work out are not even losing trades, they're just disqualified trades. Okay, now does this mean the system is going to be perfect? No, far from it. It's not. But what I can tell you after trading this for almost 2 decades is that you will see many more winners than losers. And if you follow the rules the way I'm describing them today, you will have much greater winners than your losers. And together, that's your formula for a successful trading plan going forward. Okay? Now, the couple other things you're going to notice. Number one, when a trade like this does trigger, it tends to move in your favor immediately, okay, which is huge for a couple of reasons. Number one, going back to those money management rules and that psychology. Once you're in a trade, okay, you need to remain calm and think clearly to manage that trade. But if it moves in your favor immediately, then it's very easy to do, okay? If it moves against you right away, it makes it a little more difficult. Secondly, how many of you out there trade options? How many of you are option traders? Okay? It doesn't matter whether you're trading futures or equities. Okay, so many of you are option traders. Thank you. Then you know that once a trade triggers and you buy that option, if it goes against you immediately, trying to make back that loss in premium is going to require a much greater move to the upside than you otherwise needed. Okay, so it is very important to trade with a strategy that tends to move in your favor immediately once it triggers. Okay. The other thing you're going to notice is that during a stretch like this, you're going to get multiple opportunities to enter. It doesn't always happen, but happens very often. In other words, there's a lot of nice moves higher, pullbacks, another move, a pullback, another move, and with each of those, there's opportunities to get in. So how do you handle a situation like that where, let's say we got into the first pullback and now we've got another one that gives us another signal? Okay. Well, if you're more of an aggressive trader, you can add to your position at every new setup. If you're more conservative like I am, you would just maintain your original position and look at these subsequent setups as further confirmation that you've made the right decision, you're in the right trade, and you should remain in that trade. Okay? Now, Before we move to other examples, let's look at this portion of the chart here, this downturn in the British pound CAD pair. And remember, what are the rules? What are we looking for a short trade? We're looking for a slope lower, right? Then we're looking for some type of pullback or retracement. This is a nice orderly 3-bar pullback here. And at that point, you're keeping your eyes out for that bearish engulfing setup, which is right there. Can you see it? Look at the red body, just the body, completely engulfs the much smaller green body. At the time that we see this, do we still have a slope lower in the 20? Yes, we do. So then what do? We just wait for a trade 1 tick or 1 penny below the absolute low of that engulfing bar, go short, our stop goes just above the high of that same bar, and off it goes. Immediately triggers and moves lower. Okay, let's look at a few other examples here. Again, remember, doesn't matter whether it's a Forex contract, an ETF, an equity. Here's an ETF, the Brazilian EWZ ETF. What are we looking for? Do we have a trend here? Now, if we're looking right now at this, obviously when we bring up a chart, we're going to be looking at the far right, correct? Do we have a trend in place? Right? Yes, we do. We clearly have a trend lower. Do we have momentum right now? Do we have a slope lower on that 20? Well, yes, we do. Now, what are we waiting for? We're waiting for a bearish engulfing setup. Do we see it yet? Do we have it? No, we don't. So you can keep an eye on that, waiting for that. But if we look back at other setups, there was one right in here. Okay? And this is a clear example of you get a sharp move, okay? And depending on how far that retracement goes will depend on whether that 20-period moving average is still sloping in your direction or not. So if we look at here, it had gone too far, the moving average flattened out. If we had seen a bearish engulfing setup in this area, you would not have wanted to take that trade. Okay? Now, it starts to regain momentum to the downside. We get another sharp pullback here, nice 4-day pullback. Do we have a slope lower at this point? Yes, we do. There's our engulfing setup. And we wait for a trade above the low, put our stop just above the high, and then it triggers and off it goes. A very nice. Now, what I want you to focus on here, okay, is not this whole move here, because none of us have a crystal ball. I don't think you would have known exactly where the bottom would be, okay? But what you should really focus on is look at the range of that one bar. Look how small of a risk you would have had on that trade considering that potential profit there, okay? So look at the risk compared, there's the word I was looking for, compared to that potential profit here. So that's the difference. Imagine how many losing trades one winner would overcome, okay? And I can tell you that my experience has been way more winners than losers with this. Let's look at a few other examples here. Let me show you a couple of trades we highlighted in our nightly videos for our members recently. Chipotle, who has been in the news, had given us a couple of big trades during this downturn. Okay, again, you get a flush, you get a retracement, and right in here is that setup. Okay, you get another flush, you get a retracement, flush, retracement. There's another one we took recently here. Okay, boom. So it's very straightforward, very simple to spot on your chart, very, very easy to handle. Okay, let's have a look at, do any of you here trade the SPYs or the S&P, and on what time frame if you do? Let's look at the SPYs. They've been a big focus recently, and so whether you're trading them on a daily time frame, on an hourly, on a 5-minute, on a 15-minute, we have many members who trade them on a 5-minute. Okay, let's look at this. And just this past trading session, during the last hour of trading, right in here was a beautiful setup on the 5-minute. Okay, you're going to find these throughout. there was another one back in here, right in here. Okay. Now, when you get used to this, to trading with this, you're going to be able to spot these very, very quickly. Okay. So don't get discouraged if you're not quickly seeing these patterns as quick as I am. I've been trading this for many, many years. But whether you're trading the 5-minute, the 50-minute, the hourly, and how many of you have longer-term accounts, retirement accounts, IRA accounts, where you can trade weekly and monthly time frames? Anyone interested in that? Because if you are, let me show you something here. Let's bring up a weekly. Okay, so trading doesn't have to be difficult. I often say, and I always tell my students, that it's the trader themselves, that overcomplicates trading. If you keep it simple, it's best. When I first started out, trust me, I wasn't trading with a chart layout this clean and this simple. I started with a ton of indicators on there, and it became a huge mess until I gained some experience and realized it was unnecessary. Now here's the SPYs on the weekly time frame. Clearly a nice trend higher until recently, right? Did we have momentum? Yes, we did. Were there setups to the long side? Well, let's have a look. There was one here, okay? There was one here, right? There's many along the way. There was another one back here, okay? Now, what is the difference? And these ones that, they're not much difference. They're very close to being the same size. But if you get a size bar like this, okay, and you get a much smaller bar, imagine if this bar here didn't have this wick and it was only that body, okay? That's a huge difference. For those of you who are very conservative, who might be conservative like I am, you can be very selective with these. You don't obviously have to take every setup, but you can be patient and wait for the ones with very small risk compared to the ones with the larger risk. But regardless, what do you notice again? When it triggers, it tends to move in your favor. When there's a sustained trend, you get multiple opportunities to enter, okay? And it works extremely well. Let's look at the monthly time frame. Now, we're going back to 1996 here, okay? Could we have taken advantage of most of these runs here on the SPYs using this strategy, okay? If you look back here, there was a signal that kicked off that run. If you look at the downturn after that, the tech bubble bust here in 99, 2000, would there have been a signal here to take advantage of it? Yes. Now, here, the 20 wasn't sloping that lower, so we may have overlooked that symbol because of that slope, okay? And again, it's better to be selective than risk it. But there was another one right afterwards, right in here, okay? Right in there. What about the up leg from 04 into 08? Well, we wouldn't have kicked it off right in 04, but here in early 05, you had a signal. Boom. What about the downturn after the 08 drop? Right in here. Did it take off immediately? Yes, it did. What about up in here? Now, here's a classic example of one you would not have taken necessarily because, again, we were just starting to make that turn. You probably would not have taken that signal, but even if you hadn't, boom. In late 2011, up until recently here, that was an easy trade using that monthly. So imagine trading this with dividend stocks and holding these for the long term. So again, it really doesn't matter. If any of you want me to pull up a symbol on something that you like, type it in. I'll see if I can get to a couple. We don't have a lot more time, and I still want to cover a few different things here. Let me bring up a few other stocks. Here's another trade that we took recently, and this was on the daily time frame, although you can see here on the monthly, this is Under Armour. And remember when Under Armour got going here back in 2010, 2011, right? Were there any signals here? Well, yes, there were, and you could have sat in this throughout here. But let's go back to the daily. which is the time frame where we highlighted a trade for our members recently. Let me just put some more data on my chart here. And this was it. And the reason why I really want to show you here is to make you aware of another thing that you need to keep your eye on. Here was Under Armour. It recently rolled over. And it started flushing. And you can see a nice sharp momentum lower, followed by a nice pullback. There's our retracement setup. Now, what's unique about this? What it is while we were looking for that trade below the low here to get in, the very next day it actually gapped. Okay. Now here's the thing. Okay. And here's another one, right back here during this setup. This one might have been on earnings, I think, but this one was not. When you get a gap, you need to reassess your risk. Okay. Number one, your risk is usually the range of the engulfing bar. Okay. Because you are risking your entry from just below the low to your stop just above the high. Normally, your risk is from here to here. But if you're entering down here, okay, now your risk is going to be from your entry point here all the way up to your stop. So you need to reassess. And if it's a large gap and it's too much risk for you, then ignore it, move on. There'll be plenty of other setups. If it's a small risk and you're still comfortable with it, then that's perfectly fine. And once again, the trade worked out very, very nicely there. Let's look at a few more here. I think we still have a bit more time to go through a few more examples. Here's a chart of Raytheon, RTN, and we have a nice slope higher, right? And here's a perfect example. We don't have a sharp pullback. It's more of a consolidation, about a week and a half of sideways action. And then, of course, what tells us that this consolidation phase is over and that the trend is going to continue? There is our bullish engulfing pattern. Wait for a trade above the high, which we get. Now, remember, if it had traded below the low first, it would be disqualified. If we had closed 2 candles and we still had not reached that high, it would be disqualified. The fact that it did breach that high triggered the trade. It did pull back. Unlike most, it did pull back, but not enough to stop us out, and then it just took off. Okay, so that's great. Let's have a look at a few more here. Let's see. Mike is looking for NDX. Let's have a look at NDX. Oh, actually, I think I need to talk NDX here. There we go. And now, Mike, let me know if there was a particular time frame you want to look at here. This is a classic example of a choppy, kind of an ugly chart, right? I always tell my students, if you see a big difference in the size of bars all over the place with gaps and a lot of sideways choppiness, you're making trading a lot more difficult than it needs to be. What you want to do is pick those safe, easy trades. Okay? Now, there was a setup in here, but look at the size of that engulfing bar. Look at the size of that red bar. Would you really want to take that much risk? You might have, but I certainly wouldn't. I'd wait for a much smaller bar. There was a setup in here, although, again, not much momentum on our side. That's pretty much a flat period. But let's move down to a different time frame to see if we get any signals here. And many symbols are going to work better than others. So there was one down in here, and you see these periods of retracement or consolidation can be 1-2 bars. They can be several bars. Remember that one rule. What matters is at the time that you see the setup, you must still have that slope in that 20. Okay. Now let's customize this and move up, say to 15 minutes. Let's see if there's anything there. Okay, well, there was one right in here. Okay, so you're going to see them again. It depends how liquid the issue is, what time frame you prefer to trade on, but it really doesn't matter. The ES futures D, pretty much the same. I showed the SPY, it works the same. Crude has been amazing for us over the past year with this. let me bring up a chart of crude, and then I'll move on. Here, crude, and if we look back on crude here, remember, it used to be over 100, and then it took that drop all the way, unbelievably, to 27.5 here. But there were some beautiful, beautiful setups on crude. One in there, one in here. Let's scroll back here, and there were a few others. Let's see, there were, where's the one I'm looking for? There it is, beautiful. I mean, now, once again, what's the secret here? The secret is the momentum and the trend on your side. That's what it is. It's not, there's nothing special about it. It's technical analysis, but it's trading with trend and momentum on your side, okay? Here's a chart of DuPont, same thing. Where are the easy, safe areas to trade? Obviously, when you have trend and momentum on your side, you get a nice pullback, you're patient, you get that reversal signal, and boom, off it goes. There was even one down in here, okay? Right in here. Nice and easy. And another one, I believe, in here. Let's see if this works. So closed at 61.50 and close, open 62.46. Oh, no, yeah, 50. So it did by 4 cents. So this qualifies. And see, this is a red on red. It doesn't have to be green on red, but as long as your engulfing bar is green. So that was another nice one. Now, let me show you one other thing, because as Jeff mentioned early on, we've been working together for about 1.5 years now. And I want to show you quickly what Jeff and his team have created for us for this setup. They have programmed it into MetaStock, and you'll see here that the way he's designed this, it's so clear and easy to read. First of all, remember that momentum, that slope, what we talk about in the 20-period moving average? Well, he's created that color ribbon down here, that immediately, the second you bring up that chart, you can tell if you're in a downtrend like we are here, because it will be painted red. If you're in an uptrend, here, it'll be painted green. These white areas mean it's completely flat, no trend. You don't want to trade in those areas, okay? Now, more than anything, we didn't just want to create an add-on that flagged the setups. And by the way, these little diamonds are the setup conditions. The arrows mean the actual trigger. So see, sometimes, because of those rules we have, you'll have setups with no trigger, but then the arrow identifies that trigger, and there's your exit. And but more importantly, we wanted something to help our trader, because I've coached thousands of traders, and the one common challenge that they all have is discipline. I had it early on as well, and it takes time to develop. But that discipline to follow the rules and follow the system to a T is really important. And what Jeff and his team created was an expert commentary here that holds your hand through the whole trades. It walks you through it, this little black arrow here. And I'll let him tell you more about this, because he really created this for us. But it'll not only tell you when to get in and out, but it talks a bit about options and you know, the kind of option you should select when the trade comes up and so on. And my favorite part of this is a scanner that he's created. And so if we bring up the Power Console and go to the Explore tab, I'm going to zoom out here a little. You can see these are all the strategies programmed in, and here's our Vora favorite trade setup. Not only can you scan for setups, but we can also scan for triggers. The setup here is what we're going to choose, and they have all types of markets, but there's a few that I like to follow here. For those of you option traders, again, there's one U.S. optional stocks with almost 4,300 that you can scan, okay? But I like to look at immediately the index constituents here, and the ones I like to choose are the 30 stocks in the Dow Jones, the 20 in the Dow Transports, the NASDAQ 100, and the S&P 500 large cap, okay? Once I've selected those, I select my time frame here, and then go to the far right and click Start Exploration. Now, I've got a lot of things running on my machine here. I've got multiple monitors with different applications, but you're going to see how quickly this scans the 536 stocks we've selected in those indices. It only takes a few seconds, and for me, it's really been a game changer because I actually used to search over 3,000 charts a night looking for trades, and this now with this, I can literally go through that list of almost 4,300 optionable stocks in less than 3 minutes on any given night. And you see here that while I've been talking, this is just about done here. So we'll see what it comes up with in just a few seconds, and then we'll have a look. Now, on any given night, it'll come up with a list of stocks. Okay, so it came up with only one here today. And this is funny because the other presentation we did a few days ago, we had one as well, and I'll go back and show you that. This is Simon Properties, SPG. Now, once this comes up, there's different columns here, and again, I'll let Jeff elaborate on this, but you can save your list, you can print it, you can sort it, you can open your charts directly from it. So let's open our chart on SPG, and here it is. You can see that we've got here let me go back and clean this up a little for you. Let me remove this. There we go. You can see the body of this candle completely engulfing this one. So there's the setup. What doesn't make this an attractive trade candidate? Well, this long tail here, okay? That's, so imagine you're looking for a trade below the low here, the absolute low, down near 177, while your stop would be up here near 190. Too much risk for me anyway. So unfortunately, not a great candidate. The other night, we did a search, and we came up with Regeneron here, REGN. Oops, let me type in the symbol again, REGN. And it was this trade right here, okay? Right here. Boom. And it just took off. Now, the thing is, you're not going to know when it's going to immediately take off, and not all trades are going to be this big, obviously. The key is that's not your job. Your job as a trader is to spot the trend and the momentum and these reversal signals, and then execute the trade by the rules, okay? And you are going to get the big runners that go your way, and you're going to get some quick stop outs, okay? It really doesn't matter. But going back to this, let me just put this back on here. I just want to show you one other thing before I let you go, because I'm really short on time here. But you see DuPont here, and these smaller trades up here. You see we had some really nice winners, this short, this long, and this long one here. But you see back here, this little quick in and out that resulted in a loss, okay? There are actually ways that we can avoid these trades and only focus on the highest probability setups, okay? Now, we have a pro training course that we use, that we teach you exactly how to avoid those and a lot more in great detail. And I'll show you here that we sell it in our store for $297. But for those of you who have seen me before, you know that I'm passionate about teaching. And when I get invited to present at these events in front of thousands of people, I take that responsibility very seriously and make sure that each and every one of you walks away with something of real value. So in the spirit of that, I'm going to turn it over to Jeff, who will tell you how you can get not only this course, but our next live class on this course, which is coming up this Friday, Feb 5th, absolutely free, okay? So, Jeff, if you're there, I'm going to let you take it from here, and I want to thank everyone for coming out again, and thank you for allowing me to present today.
Vince, thanks for coming in, and of course I'm here. Where am I going to go?
Great.
All right. We had a question that I'm going to just jump straight to, and then I'm going to kind of talk a little bit about how this works and stuff like that. There's a little, let me go ahead and share my screen real quick. And this is Apple, a trade that recently, if you run in the scans, you could have taken part of. But there's a lot of questions in terms of why are some of these candles hollow? And why are some of them red and some of them green and that kind of stuff. So I want to kind of get real clear about this and just kind of explain it to you. For a if a bar is filled in, we will basically paint it in. That's the same as if it was a red candle in another platform. Basically what it means is your close was below your low. So that's basically a filled in. Traditionally they would fill those in candlestick charting. If it's an open candle, it means it opened low and closed higher. So this right here would be traditionally a closed candle, meaning just the open is above the close. And a hollow candle is going to be basically where your close is above your open. That's what that means. Now the color coding that you're seeing in the screen has nothing to do with that. Actually, if we kind of look at this chart right here, we had a trigger which is denoted by this triangle. And then the next bar we triggered into that trade by going below the low. And as long as we're in that short trade, it's going to continue to show a red bar. If we go back a little bit, I think there's a long trade. If it's in a long trade, this one didn't last very long, but if it's in a long trade, it's actually going to color code the bars green for you. So that's the difference. Again, whether it's hollow or filled in has to do with where the close is in relationship to the open. And if it's red or green, just has to do with if you're in a trade or not right now. So right now it's white, so that means, well, you're not in a trade. It's also hollow, which means the last trading day it closed above the open. Okay, hopefully that makes sense for you. There's a ton of questions about that, so I thought I'd kind of address that first. One of the things, it was a lot of fun to actually program this with Vince. I had a good time. One of the things that was kind of the most challenging part was kind of getting the slope right. I think Vince and I looked like at about 3,000 or 4,000 different charts and came across like 5 or 6 different versions of how we would calculate whether this moving average was sloping up or down. And what we came across, I think we did a really good job with. I really like the way that it works, but basically that calculation is it going up enough to give us an entry signal, or is it going down enough to give us a short signal? So as long as you have a big enough slope downwards, like you do here, you're going to see a red, and the system itself will automatically look for that engulfing pattern. You can see that engulfing pattern happen on the chart. It's denoted by this triangle here. That means there's a setup that's currently active on the chart. Okay, right here, if that setup happens, you're going to, which it did the very next day, then you're going to get an arrow on the chart, and we call that a trigger. So this is your setup bar with the diamond. Here you have your trigger. Again, those are automatically painted, and when you get your exit, it's just going to basically paint that on the chart for you as well. So again, with this, I really do like the ability and the things that we put together for the commentary. If you're not sure about the rules, we try and organize this in such a way, because I think it's important that you understand the rules so you can properly trade it. But what we do is we try and remind you what the rules are when you get the setup. So for example, if I move my commentary right here, it's going to say there's a setup bar. Right here it says my favorite trade setup is currently signaling a short setup opportunity. To confirm this is valid, you must wait for a trade below or at 108.97 to confirm a sell signal. So basically what that's saying is if we trade below 108.97, we're getting in tomorrow and we're going to go short. Okay. A trade above the high of the bar would invalidate this trade. And that kind of gives you some advice. We kind of tell you how to take advantage of that trade, and we tell you where your initial stop should be placed. There are some exit guidances here, like you can trail the stop loss according to the My Favorite Trade Setup stop loss indicator, or you can exit the position 2 weeks before the option expiration date. Now, if we go to the next bar, basically it's going to, now let's pretend 1 day had elapsed. It's going to tell us we're in a short trade. And then as long as we're in that short trade, it's going to continue to kind of just tell us that we're in the short trade. And of course, if it exited, basically there wasn't much more to tell you than you should get out of the position now. In this particular case, this is a pretty good example for Apple in the last movement. There's a lot of really good examples. We could look at a chart of USO, which is something that has worked really, really well on. Works on a lot of different instruments, and I think that's why people like it so much. So, was looking at a question. We are recording today's event, and we will be sending archives out next week. Okay. So in any case, that's what it does. One of the things that we kind of decided to do when Vince and I were determining how to package this up is I'm a personally a big fan of education. So that's why I set up a 10-hour training day, right? So I think it's important for you to understand exactly what's going on with the trade, how to implement it. And so every time you buy the Our Favorite Trade Setup, you're going to get a coaching class that's going to walk you through the setups, the entries, the exits, everything. It's just included. There's no additional cost for that. And it's a very, very cool addition. Before I get ahead of myself, I do want to talk a little bit about the scanning. Vince talked about it very, very well. Basically, like we've got your favorite trade setup scan. So that's going to look for the engulfing pattern. You might want to run that if you're going to be watching some stocks tomorrow. It'll give you a list of things that are going to set up. You can put them on a watch list and then actually set an alert if they trigger in for the next day. If you're halfway through the market day and you're scanning for a daily and you want to see something that's set up yesterday, for example, has a trigger today, then you could run this trigger scan. And again, it's very, very easy. You just select the scans that you want to run, the instruments that you want to run, and it gives you a very full report. And it's just one of the things that I'm so proud of is when we develop technologies like this, and they actually are well used. I mean, Vince now saves so much time in his own personal trading by just running a scan every day. You know, the thing I love about this stuff is the ability to kind of, for me, there's like 3,500 stocks that are optionable. I'm sorry, 4,305 stocks that are optionable. I don't want to look at 4,305 stocks every day. What I want to be able to do is look at the 10 or the 15 that have an opportunity to make my decision from there. That's one of the ways that the scanning will help you a lot in your trading and help you be more effective. So in any case, it includes that setup exploration, the trigger exploration, the templates. There's two templates with this one. One is a very clean one, and it basically just shows you exactly what you're seeing, the slope, the entries and exits, and the triggers on the chart. The other one actually shows our slope indicator. So if you kind of want to see what we're calculating as a slope, you can see that on the chart as well. Okay, and normally the cost on this is only like $499, and remember that includes a $300 course. That's something that you can order on his website. I wouldn't recommend you order it on his website. Get it as part of the add-on. It's $399 here at the summit. I know that our phone lines have been pretty busy, but give us a call, 800-882-3040. You might want to call really quick, see if you can get in front of the line. It does have a 30-day money-back guarantee on it, and I hope you enjoy it as much as everybody else has. It's been very, very well received. On a personal note, I want to just say thanks to Vince and the Trading Wins team for our professional relationship. I very, very much enjoy working with those guys. Couple questions. Neeraj says, will the Vince Vora scan work on the Hong Kong markets? Will it indicate opportunities on Hong Kong share graphs as well? Yes, we do have Hong Kong. Yes, it will look at the slopes. Yes, it will look for the engulfing opportunities, and it should work just fine. I don't see any reason why it wouldn't. Again, there is a 30-day money-back guarantee on it, but I don't think you're going to be taking advantage of a return on it. Give it a shot. See how you like it. $4.99 is not a monthly cost. It's not something that you have to pay for over and over again. It's a one-time cost, so you buy it, you own it, you own the paid training course as part of it. And again, $3.99, and if it doesn't work for you, well, it's a pretty low-risk proposition, I would say, which is what traders like, right? It's a money-back guarantee on it. Steve, you can call on Monday to purchase. That'll be fine. You can also play with it and get it running over the weekend if you want. Peter, the MetaStock software is not included as part of this offer, although we will throw in a trial, as we will with anything else that you do. We'll throw in a 30-day trial, and the cost for MetaStock is as low as $59 a month for hourly updates, and it goes up from there. Just give us a call. We'll kind of go through what you're doing, what you want to do, and what markets you need, and that kind of stuff, and we'll make sure you understand the pricing fully. So the number is 800-882-3040. Marcus, get in touch with me offsite, and we will kind of take a look at what you're doing and why you have a little bit different looking charts. But contact me a little bit. Kenneth says, if I already own this plugin, can you get me a discount on the winning momentum? Okay, Kenneth, I would recommend that you contact Trading Winds at tradingwinds.com and tell them I'd give you an extra special discount. All right, very good. They're all here there. So.